All right. Hello, gang. So we are in the midst of your week of Fibonacci and Elliott wave. And what I'm going to cover in my class here today, or my session, is how to use different Fibonacci applications in real time. So my main focus of my class today is actually going to be the very last trade that I took here this morning, well, afternoon my time, as afternoon your time rather, if you're on the New York time. But I'm going to show you how to use those different Fibonacci applications on those charts, and we'll take a look at a couple of different types of markets. Now, I've been using Fibonacci practically my entire trading career because I come from a background in art and archaeology, so it is something that I was very familiar with. And I don't know, how much, you know, credibility there is as far as the sequencing of Fibonacci in real life. A lot of people have spent years trying to disprove it, but at the same time, it's really hard to completely knock out the fact that when we're using Fibonacci in the markets, it works incredibly well. And what I really just boil it down to is that as humans, we are just creatures of habit. And this just seems to be a really natural kind of wavelength for us to be on. And I am a trader that relies primarily upon pure price action. So I don't have a lot of indicators or anything that I use on my charts other than volume and Fibonacci. And Fibonacci, I'm so used to using it that a lot of times I don't even actually draw it on my charts, but I can draw fans and retracement levels perfectly just with the line tool, just because I've been trained for so long to recognize these different levels of support. So what I view them as are crutches, they're helping you out in terms of recognizing things, not only in terms of the best entry timing on a trade, where to look for your exit timing, which is especially important when you're trading options and you need to pay attention to those expirations, and also for price development. So we're going to kind of fly through a couple of different types here. There's actually four different types that we're going to delve into. For those of you that are not familiar with Fibonacci, it is based upon some long ago Italian's discovery of the Fibonacci sequence. Maybe not a pure discovery by him, but he is most well known for popularizing the sequence. And it's just based upon each new number of integers where we are adding each of the previous two is creating the next number in the sequence. So pretty simple idea. The usage that we see in art is in relevance to what they call the divine proportion. And this is where we start to get some of those Fibonacci numbers that we use in trading. So those of you that have been trading using any sort of Fibonacci so far, you'll recognize things like that 38.2 or the 61.8 or even the 1.618 here. So these are really common Fibonacci numbers, and here's some of the relationships of how they work together. So basically, if we're just adding that 61.8 and 38.2, we're getting 100. 61.8 divided by 38.2 is that 1.618, and then 100 divided by 61.8 is 1.618. So these really don't have a lot of intrinsic value in and of themselves as far as, oh, hey, you know what? These just seem like random numbers. What other random numbers could we use on our charts as well? Like a 50% retracement. But for whatever reason, humans tend to gravitate towards these levels. And what's really interesting is that as we're putting them on our charts, you can't simply go in and say, hey, you know what, I'm going to just throw it up at these levels. There's certain ways where you have to use certain rules in terms of how you apply different Fibonacci levels, especially when you're using the Fibonacci fan. And one of the strategies that I'm going to show you here is a pattern that I call the Phoenix. It's one of my favorite reversal patterns. It's the one that brought us off of our most recent lows in the market. But if you don't know the rules that, I've spent years developing as to how you manipulate your fib fans, you could be placing them in completely the wrong levels and they won't work at all. So part of what I'm going to show you here today are some of the basics in terms of how we use the fib fans, but then also some of the variations that I've developed over the years that you're not going to learn anywhere else. So when we're looking at Fibonacci in terms of an indicator, these are the numbers that we are looking at. And they can also be extensions and retracements of those numbers too. So for example, negative 23.6 or positive 123.6. So different variations of those as well are going to be ones that we use. Now, the first one that I want to show you here, this is the Fibonacci retracement. And this is a chart of oil. Oil is something that I was trading here earlier today. And when we're looking at Fibonacci retracement levels, what we're focusing upon is how it retraces from a primary trend. So in this case, you need a series of higher lows as well as higher highs to establish an uptrend. When we see that sequence break or a channel break, that's where we can look at confirming different retracement levels. And what I was looking at this morning, we're actually going to see this when we come in and discuss the Fibonacci fan, was where I would locate support on oil. So not only do we have the congestion kind of support over here, but you'll also notice that this is a 76.4% Fibonacci price retracement. And when I'm teaching Fibonacci and using it in my trading, I want traders to focus upon using combinations of different types of support and resistance levels. So if you only have one thing in terms of a fib level, like just a retracement level, like what we see here, that's not usually enough reason to go ahead and take a trade based upon that level. You want to see other things also working in favor of those pivot points. So here is the second type of Fibonacci that we use, and that is the Fibonacci price extension. So when we're doing our Fibonacci retracements and our Fibonacci price extensions, for a retracement, you're going to go from that low to the high. Now, when we're looking at our price extensions, we have a third point that we use. We use the low to the high to the low again over here, that third point. So you're basically looking at your retracement level. And then you're using that to help you identify upcoming resistance levels. And again, you're not going to use the level just by itself. You want to have other things that are coming together at the same place when you're doing your executions. So for example, when we go and add a fib fan, you're going to start to see fib fan resistance appear as well. So another thing to think of when we're using these Fibonacci price extensions is to think in terms of those measured moves. So the main trade that I had here today was on the NASDAQ. It was on the long side. And so I used these retracement levels to help me time areas where I added into and built into the position as it was moving higher this afternoon. So what you'll notice is that I put on a Fibonacci retracement level, and I'll show you this on the charts here in a minute too. This is just a 50 tick time frame. So I took the first high here to the first low. So that's our 1 and 2 points. Pulled it up and used that third point there as my next level. So what this does is it puts on this Fibonacci price extension. And when you're looking at something where you want to go as a reversal coming off of that zone, ideally you want a little bit of a slower momentum move on your second correction. So as it's coming into that 100% price level, it's actually best if it doesn't quite hit that 100% before it breaks the trading channel, which triggers the add-in zone. Now, you also want to pay attention because if it doesn't break that channel and yet is pulling past that 100% extension, well, you're going to have higher risk if you're looking for a reversal coming off of that level. So, what this does in terms of looking at those retracement levels here is you can judge, hey, is this really going to make it to that 100% or not? What I often use is as this is coming down here for your continuation after it has that two-wave correction, if it gets stuck at the 50% price extension, that is a heads up that it is much more unlikely that it's going to make it to that 100%. So this is a pro here for looking for a little bit of a shallower pullback to allow for greater continuation on the upside. So that's something that we actually want to see here. But if you're trading something where you're taking like a breakout strategy, here's your first point, here's your second point, and here's your third point. And you're seeing that coming up and getting stuck at that 50% extension there. Well, what that means is that it's going to struggle to make it to the 100%, which is a typical target level. In fact, the only way that it has a high probability of still trying to make it to that 100% is if this is your correction in here on the way up. Let's say it lasts 30 minutes. It pulls up here to our 50% extension, corrects for 15 minutes, pulls up to 61.8, corrects for 15 minutes, and then it can make it up to the 100%. And that's just because it takes that correction and it makes it into a tilted two-wave correction. So that allows it to still be able to manage to make it to those 100% levels. Now, what I then used these for here this afternoon was to help with identifying different target levels and different levels of resistance to keep an eye on as far as taking partials on that position. Another type of Fibonacci that I use is the Fibonacci time extension. So my very first move here coming into this week really was continuations coming off of this 2T pattern. So this is a pattern where we are looking at a high that goes to just a very slightly lower high than previous high, and then it pulls up and goes to a slightly higher high than the previous high. So when it comes to time development, what I want to use is the extension here between these lows. So this second pivot, I want to see hitting at that 61.8% time extension. So if this is your 0 to 100, 61.8% past that level, which on NinjaTrader is 161.8, but on some platforms it's going to say 61.8. By having a pivot there, that tells me that that is my actual breakdown point. It needs to be 61.8% or later. So by hitting a high right here, that is telling me this is actually too early still because it's not even yet at that 50%. So once we get to that 61.8% or later, then that's a great zone to start building into a position on the downside. And then you want the confirmation to be coming down into about that 100% extension. And you want momentum to have already picked up by the time it makes it to the 138.2%, which on NinjaTrader's 238.2. So if you're looking at a breakout strategy, you can use the same technique. So if this is our upside move here, and then we go into a two-wave correction, you want that last pivot to be at or after the 61.8% time extension between those highs. So you would go from this high over to here, and then that pivot low here should be at or after 61.8. This is how we get the highest probability for our reversals and breakouts based upon these two types of strategies. And you can use this for a lot of different strategies as well. So for example, a short I had as a continuation was when we were looking at a head and shoulders pattern. And if you take the high from here to the head, then we want that pivot over here to be at that 100% extension. If it's slightly early, there's a higher risk it's going to fail. If it's slightly later, that's still good as far as the timing goes, but it needs to pick up by the time it makes it to that 138.2% from here to here and then here over. So you're 138.2% here. So it needs to be showing that downside momentum by that point here. In a second, we will move over to our actual charts, but I want to finish going through these different types. So as I mentioned, oil was something that I was trading earlier. So our final type of, whoops, it went crazy on me here. Sorry about that. Our final type of Fibonacci that I use is the Fib fan. And this is to help with the timing aspect of it. So when we are looking at corrective levels, remember this was the 76.4% price retracement from here to here. And it's also the 76.4% Fibonacci fan retracement going from there to there as well. When we have double tops, I tend to use the second high. Same thing if this had had a double bottom over here, I would tend to use the first low instead. And so what that does is it helps me confirm that I have a really strong support level here. And then when this broke higher out of this little megaphone, that triggered my buy signal with a stop that basically just keeps going up as the trade goes higher. This is actually a technique that works the best when you are looking at something where your retracement is slower. So what I was expecting in this case is because the retracement is smaller than this initial upside move, I was looking at the possibility that this could come into a secondary retracement and then offer up another continuation over here. So I was looking at this with that possibility in mind as it was pushing higher, but it came back up all the way to that breakdown point, which is the 61.8% price extension again coming up here. So that told me I had a really good probability that it was still going to be able to keep going. Now, for those of you that are trading on Ninja Trader doesn't have built-in fib fans, but what you're going to see here, especially throughout the rest of my class, is that I use them quite a bit. They are great for both confirmation tools as well as timing targets. And I'll show you how I use them on my trades here today in just a minute. But you can pick that up at ToniHansen.com/Ninja Trader. And it's going to put all of those fib fans into your Ninja Trader for you. And I'll show you that here as we go forward. So using Fibonacci combinations, this is where we really start to get an edge. Now, on this movement here, coming off of the lows as we were heading into the week, we had what I call a chevron phoenix. And it's basically this really strong move higher, kind of shifts here, and then it shifts on the pullback. Notice that is very much the same type of pattern that we saw today on oil. So it had that steeper pullback into the 76.4% fib band. So same type of idea. And again, if this was more of a base on this correction, then you're going to have a little bit more of a typical Phoenix continuation pattern. Now, as we were coming up in here, we get that 2T pattern. So you get the slightly lower high, the slightly higher high. This is where we saw that measured time development where this pivot high was at or after that 61.8% as this was coming up in here. So we saw that 61.8% time extension. And what you'll notice here is that when we take our fib band from the high to the low, that's also corresponding to the 76.4% fib band there. And it's about the 61.8% Fibonacci retracement level as well. So you have a multiple types of things kind of coming together here where it's also retesting the 50% fib band. And so all of these things help with confirming this as a good breakdown pattern for a continuation on the downside. I was looking at it as this bigger megaphone that you can kind of see forming here, where we pull up, we have the two waves down, we pull up, this is a Phoenix in here. It breaks that downtrend channel, goes to a slightly lower low. This is a 2B, which is the reverse of the 2T up here. Goes into the Phoenix and then the slightly higher highs. So we're getting that bigger megaphone formation coming into play. And when you're dealing with a megaphone and your fib bands, you want to go from the high to that second major low in the megaphone. And that's going to give you your most probable level for getting reactions off of your fib band to reverse. Now, the problem with the first test here is just that it's too strong. Momentum's not really shifting as it comes into it. It does have a two-wave measured move, so it's still a really good level of resistance in terms of the trend, but it doesn't have the momentum shift that you end up getting with the 2T over here. So this ends up serving as a really strong continuation. Most of my trade came in here where it had a smaller megaphone for the continuation on the downside. That's what I used for most of mine. And that pivot high that's right there, we can't see it very well, but it's also a 76.4% fib band based upon this pullback move in here. So that was also a 76.4%. And then when that broke lower, that triggered that bigger continuation for me on this downside move. Here is another view of this combination. So you can see that 61.8% level there. And what you'll notice is that those negative fib levels often serve as really good support levels as well. So when we're looking at our retracements, you're going from here to here, but having the negative levels on are also serving as additional levels of support. And this brings us to the trade that I had here this afternoon. So what I was looking at was reversal patterns on the intraday charts. And let's see if my NASDAQ chart is finished loading up here. Here's my larger 1,000 tick chart. And what you'll notice here is it has three major lows. So remember that 2T pattern that we saw earlier? Well, this is a different variation. It's called a tilted 2B. So in a typical 2B, what you would have is you would have your downside move, you get your move up, you'll have a slightly higher low, and then you'll go into the slightly lower low. And you'll be looking for that 100% price extension there, which you can see right here. But in a tilted one, we end up with this going to a slightly lower low first. So it becomes more of a hybrid in terms of the type of reversal. If this is flatter right here, we call that a tilted 2B. If it has more of a pivot like that, call it a momentum reversal. So you've got kind of that middle ground happening in here. And as this is forming here with the extensions, here's the 100% extension right here. This is something where if this has a pivot that's before your 50% or at your 50% and then goes to that lower low, it has a greater probability of a stronger reversal. So the fact that this doesn't hit a high over here at the 61.8%, that is a pro for this being able to turn back around again. And that's something that I use with the timing. Now, the smaller trade is based upon what was happening down in here, where you're starting to see what we call a foot, that little zone of congestion. And you'll notice that in here, going along this trend channel, this is where we break that trend channel. So I'm using this low here as my first initial low. We come in, we go into that second low. Now I can do my time extension here to here. So what I'm looking for to reverse is a pivot point that is going to be at or before the 50%. Orange is 50%. Blue is the 61.8%, and the red is the 100%. So as we were coming into the 100%, the fact that this had that high, the same way over here, here's the 50% over here. So that's before the 50%. So this was right at the 50%. So by coming down, now putting in a low at about that 100% extension and a measured price extension where it is just shy of that 100%. Remember, just like earlier, where if it is just shy of the 100% and breaks the channel, that becomes a stronger setup. Now, I was pretty aggressive in this because I was going based upon multiple time frames. So I didn't even wait for the bigger channel here to break. My line's not very straight. I started building it as the smaller channel was breaking in here. I kept my stop on slightly more than that 100%. So I just gave it a little bit of extra room there just in case it did a little bit more of a flush. And basically what I did was I went and I used this channel here. And then as that was coming down, I had it about here. I took the distance between these lows and a quarter of that distance and added that on. So that put that stop right there. Let me show that to you again. So when you're going down here and you're going to those lower lows, look at those previous two lows here. Divide it into quarters, take 1/4, add that on, and that's where I'll put my stop. So what this does is it protects me from 90+% of those situations where it flushes and then ultimately reverses. So then when it broke that next smaller little channel, I added into it. So you've got one main type of Fibonacci tool here that I was using, and that's that time extension. Now we also have the second tool with the price extension. So going from here to here to here, those are the 3 points for the price extension. So as that passes the 76.4% zone, as soon as it hits 76.4% or more for price extension, that becomes my zone where I want to start to look for reversals to happen. And you can see my entries here, and not a sim account. This is my live trading account. Here's that detail on the 15-second time frame. So the previous chart was showing you on a tick chart, 100% tick chart. And what you'll notice is it does look a little bit messy over here to start with, but I use both tick and time frame charts. And when I do that, look at how that really cleans things up. So that mess in here, that's creating our 3 lows over here, but then I've also got that 3 low extension over here too. So both of those combinations are working together here. And notice one of the keys here is that I'm using multiple reasons. I'm not just basing a setup on a smaller setup, a smaller time frame. I'm also using those bigger time frames. I'm looking at my tick charts, I'm looking at my time frame charts, and I don't have a lot of monitors that I use. In fact, today I was only using 2 monitors. That's it. Usually I'll have up to 6, but today I only had the 2 open. So you can do this still with just having a couple of screens. You just have to know what are some of the key fib things that we are looking for. So in here, you can kind of see that movement. And this one had 3 waves down. So I was looking at the possibility this could do a third leg down, but it ended up basing a little bit longer. So I use that as a verification that, hey, this is really trying to start to reverse here. Now, what you'll see I did though was I didn't put everything on it at once because it hadn't broken that bigger channel yet. So I didn't put on everything all at once. And as it started to shift when it came into the 76.4% retracement of this level, which is right here, I took off part of the trade. But 100% price extension right back into that 76.4% Fibonacci fan and the 76.4% Fibonacci retracement level built back into this position. So now this creates a larger overall position than I had to begin with because I only took off partials here, but yet I added as if it was a completely new position. So I ended up with about 30% more than I would have had if I only kept the trade on over here. And this is what I call advanced trade management. So it's one of the techniques that I'll use for building into positions at some of those early levels. So this shows you the retracement. You can also see that Fibonacci price extension on the downside and the Fibonacci fan, which is going from the low here to that high up there. And target levels I used on the position after that point were based on larger time frames as we went into the afternoon. So one of them was the midway point of this breakdown. So I was looking at that 50% retracement, which hit right here. And then the other one was just looking at the resistance levels up here too. And we'll go and pull those up here in a second. But notice how well adding like these multiple levels of Fibonacci really work together. For those of you that want to learn more, I have a 3-week course that goes into these reversal strategies where it is over the course of 3 weeks. It's available on demand though, so you can go through it at your own pace. And I'll come back to this here in a minute. Just want to show this to you for those of you that are interested in learning more about my type of market analysis. And you'll see even here that we do rely quite heavily on the Fibonacci fan for avoiding false entry triggers and timing the absolute reversal points on these Fibonacci moves. So you can see again, this has a situation where this was just a stock photo and the correction lasts for a shorter period of time than this upside move. So this move could have put in a secondary correction and then continued from that point too, just like a couple of them that I showed you here earlier today. Now, what I want to do is I want to go over to the charts and I want to show you how to actually put these on your charts. So I'll just start here with our NASDAQ and show you some of these levels. Let me erase the one up here. I'll make this a little bit darker. So we can see it a little bit better here. So for that reversal here, what I was looking for was going from, we go up here to the little drawing tool. We want to go down to Fibonacci time extensions. And then here, we're going to go from this first low, where it goes into that congestion zone, to that second low right here. So what you'll notice is that this level right here is kind of a light orange. That's 50%. This is 61.8, and this is the 100%. So what I was looking at was that we had that time development here to here to here, and then also there to there to there. So we have this series of three where we have that 100% price extension on three different time frames. And the pivot point here is before 50%. So as this is coming down into the lower end of that trading channel, that is telling me that, hey, this is going to be a pretty good spot that we have a high probability of getting a reversal, or at the very least a two-wave correction coming off of that before it could continue lower on the bigger time frames, because our bigger time frames are pretty weak still on our daily charts. But I was just looking for that intraday bounce. So levels of resistance, this was that 50% I told you about, and then I played around with building into it again with the little two-wave correction that we were looking at on those larger time frame, or those original charts that I was showing you. Just playing around with those two-wave moves to just lower my base cost on the entire trade there. Now, other things that we would look for in terms of Fibonacci levels would be for this as a continuation play on the upside. If this was going to go and fall into a phoenix, you would take your Fib fan from your low to your first pivot high, and then to the low over here. So your Fib fan would go from here to here. This would be your 76.4% Fib zone. And you would want to see that 100% time extension in here. Now, what we had happen though is that this went to a slightly higher high. So what this means is we need to make some adjustments in terms of the Fib fan. So this can provide a couple of different levels as far as where that Fib fan would go. So this is what it would look like if it was textbook. So you would have that smaller head and shoulders here. And then since you have another pivot over here, this could break higher, come in, and go again at that next extension, which would be 100% from here over. So these are what we call do or die points. Those are going to be key levels where your security, no matter what you're trading, has the highest probability of offering a continuation strategy. So in something like this, where we're getting kind of that shift in the momentum, your risk is going to increase. To lower that risk, what I would have preferred to have seen would have been this to actually go into a megaphone. So our Fib fan would go from the low here to the high here, and then we would be looking at the 76.4% Fib fan as a support zone again. So on the chart, that Trade Tracker Pro that I've developed for NinjaTrader will put your Fibonacci fan in here down under everything else. Click on it. You're going to go from that low to that high there. And that is where your 76.4% Fib fan zone is going to be at. Let me clear that so you can see it. So ideally for a megaphone for a continuation, you would want this coming back down in here where you're at that 100% extension here to here. So this would be another high probability setup. So we've looked at two variations that would provide a high probability for a continuation based upon what happened here this morning, or early afternoon rather. Unfortunately, we're not really getting either one of those. So it does make for a bit of a trickier zone of trading. You're going to have higher risk on your setups here at this point. We do have one level where you could go down smaller to watch for, and that would be to take this. You got your 100% here, and go and take your fib fan from your low here to your high there, and then use that 76.4% as a zone for buying into the setup. And the thing with this is though, because this pullback is faster than the upside move, it increases the probability that you can get a secondary correction. So this could still go and pull back more. So it's not something that I like to use as much. I'll use it when this will also be timing on a larger time frame that I really like, but not as much using it just by itself. So in a better situation, what you would have would be something that comes up a bit faster. So your fib fan would go from your low to your high here, and then you would be looking for the slower correction with the 76.4% here. So when it comes in faster into the 76.4%, what that does is it opens it up to a number of different things that could follow. It could go into a correction like that, where it basically creates a shoulder. It could go into the slightly higher high where you get a 2T. So you could have your high here and then go to the slightly higher high and then reverse like that. There's just a lot more possibilities that can happen. If it's something where I'm already long and I'm just continuing to focus on building in with that trend, I don't have a problem adding in on that because I'm keeping a pretty dang tight stop on it as well, on what I add in. But if it's something that you're taking as a position just by itself, your queen is your momentum. And if you're fighting that queen, you have a number of different adverse moves that aren't going to be as highly workable in your situation. So just be aware of that when you're fighting that queen momentum. So in this case, our momentum here had shifted coming off of the lows. So the predominant queen was one wave of buying and then going into this widening megaphone. Now, typically this type of widened megaphone is actually a pretty good reversal pattern, but with only one wave of buying, it's not as great of a reversal pattern. It works better when you've already got 2 to 3 major moves on the upside as far as the buying goes. And then this would be something that would often go and turn that trend around completely. So here's a couple of ways that we would look at this live. Let me show you some other examples here. So here's another. I got my market reminder going off there. Sorry about that. So here's another chart that I had up. This was on the Dow. And what you'll notice here on this one is that I was focused upon this on the short side here. So what I was watching was, where are zones that I could get this trying to pause as it's coming back down. Again, pay attention to the upside time development compared to the correction. So in an ideal continuation move, what we would expect is that if this is coming into a 76.4, but this time development here is shorter than over here, you have a greater risk that your bounce off of that level won't necessarily turn things around, especially if it's gaining momentum as it comes into that. So if it's actually slowing momentum, that's better than if it's gaining momentum. So in this case, what I was really just using this for was just for timing the continuations on the downside. And what you'll see is that the 76.4% retracement holds perfectly as far as support goes. So we're also looking at those retracement levels for reversal patterns. And now we're looking at them as resistance levels. When your fib fan breaks, especially when it's coming in more quickly, your fib fan will then become a resistance level. So it can be used to time continuations on the downside as well. In fact, that was something that I used earlier. Let's see if I can remember what time frame that was on. Oh, it was on the NASDAQ. Over here, right here. So we have the same thing happening. So it has that move up, but you'll notice that it has a pullback that hits the 76.4% at a level that is smaller in terms of the time development. So what that tells me is that bounces off of that level are going to have those additional risk factors. So remember I drew, your two-wave correction upward continue. Well, I used that as a short. So as I was coming in here, putting in those measured distances between these lows, this is about a 50% time extension. So it was a little bit earlier than what I wanted to see, but I was playing with it based upon the larger momentum coming down out of that. So then that resistance level coming back up into that fan served as a level to add in for the continuation on the short. And I was focused primarily on a time frame chart, which actually put this pivot high perfectly at the 76.4. Don't have a time frame chart here open. Switch it over. So here is what I was using. So what you'll notice is that you had the move right back up into that 76.4. So that served as a continuation trigger for this trade. We've got the nice 100% extension here. Came up, like I said, this was about closer to 50%. Ideally, what you want is for that second high to be at 61.8% or more. Well, I guess on the time frame chart, it's right smack at that 61.8%. On the tick chart, it wasn't quite there yet. So what you want to see is at the 61.8%, which is that blue line, or later, that's going to be ideal for the continuation. If it hits earlier, you have a greater risk of getting something like a head and shoulders that can form, which can increase your risk of it going and flipping back around on you. So ideally, 61.8% time extension between lows to get a continuation on the downside. And then confirmation of it by the time it makes it to the 138.2, which is this line right here, that second yellow one. So you want it having that momentum going by the time it gets to that point. Back this up to our larger time frames over here. So here's another one where you're looking at things getting a little bit trickier in terms of your fib fans because it has that extreme move up, but then it also has that extreme pullback. So sometimes what I'll do with my fib fans is that if this pulls back more than 61.8% of this upside move, one of the more advanced rules for the fib fan is that on that pullback, hook that low up with the 61.8% fan and then use your 76.4 for your trigger point. So what that would look like is a fan manipulation where you're going here and you're pulling it down to hook up that low there. Now, the key to this working is that this pivot right here has to stay at or above 76.4 price retracement. So that Phoenix class is going to go into all of these different ways that we have based and created rules for our Fibonacci fans. So what you'll notice here is that this actually pulls a little bit through that 76.4% retracement before it hits the 76.4% fan. And what that means is that I'm typically not going to use the fib fan as a measurement tool on that particular trade. I'm going to treat it more like it would be closer to a double bottom as opposed to saying, oh, hey, if that channel breaks, I'm going to take it. Because there's a greater probability that it would continue lower. It didn't in this particular example, but the risk factor is greater. So this shows you an advanced manipulation of your fib fan where we don't end up actually using the fib fan because of where it ends up putting in that pivot low there. All right, gang. Well, thank you all for joining me here today, and I hope you learned a lot about how I use these Fibonacci levels in my trading. And here again is the link for that course. So what this course does is it focuses on those very initial continuation moves on both the downside and the upside. So it's looking at those reversals that are coming off of the lows and the initial continuation here. And it goes into a ton of detail. So we're looking at 3 Saturday sessions that were recorded and are available on demand. So you'll get the template as a checklist for that strategy. You'll also get in-depth education on using the Fibonacci tools for timing that particular reversal strategy. And again, it's just a confirmation of a reversal. So your pure reversal is down here, but what you're looking at is the continuation of that reversal. So it looks at situations where this is going to have the highest probability of a full-on trend reversal versus situations where this is more likely to just come up a bit and then create a continuation on the downside. So it's this trade here, which we are typically looking at least a 4 to 5 to 1 return compared to its risk. And a lot of times we see that go 20, 30, 40% or 40 times what the initial move is. So the Phoenix course, Ray, actually goes into things a little bit more slowly. So you've got a lot more time to really kind of adjust to this. So this is just a great overall class in terms of using the Fibonacci tools. And I know David makes it available on demand as well. He's got that recording going. So you can go back and go through it and pause it and study it at your own pace as well. Can someone new learn from this class? Absolutely. Yeah, you don't have to have already been using Fibonacci. In fact, the reason I use Fibonacci so much is because it is one of those indicators that you can use with new traders, and I can teach them very quickly the rules for making adjustments. So even like some of those advanced levels for alternating our fibs, they have rules that I've developed for how you do it and the rules for when it no longer becomes viable, like what I just showed you. So even the one that I just showed you, even though it still worked, unless something is working 80 to 90% of the time, I consider it as not really being that useful. So I want a tool that is going to have that really high probability and lower threshold in terms of adaptability for newer traders that are trying to learn it. All right, David, thanks again. Does anyone have any other questions? I've been trading for about 25 years now. So I started trading when the markets were first moving online back in the mid 90s. So the stuff that I teach now really is based upon practically a lifetime of experience here. Is this how algos work? Oh gosh, there's so many different types of algorithms out there. I am assuming that there's plenty that are based upon Fibonacci though. And actually, if you add that Fibonacci tool to NinjaTrader, you can use it for automatic trades as well. So for those of you that do program trading strategies into systems like NinjaTrader, this can be used for triggering both triggers, entries, as well as stop levels. In fact, a lot of times my entry points are based upon the fact that it's coming right smack into that Fibonacci fan, and everything else that I was looking at was also lining up, except for maybe one or two things, because no trading system's ever perfect. But if you have 4 out of 5 things in your favor, that fifth thing doesn't tend to manage to matter as much. So in the case of the reversal today, coming off of the lows, the thing that I did not have in my favor was the larger time frames, the daily time frames. In fact, let me show you a daily chart of that NASDAQ because it is actually something where, for those of you that do follow me live, we were using this 76.4% retracement right here as a trigger point for reversals on the short side. And then that 61.8% is your main initial support. So what you're seeing here is just kind of that retest of that zone, but it's still serving as a really good resistance level in here. And because the momentum was so extreme on the upside, but then had enough of a pullback that, this could go into chop, and it's easier to just focus upon what's happening on the smaller intraday timeframes now as we're in the middle of this correction here. You are welcome, everyone. And if you have any questions for me, you can reach out to me at Toni@ToniHansen.com.